Yo, what's going on, everyone? Welcome back to another video. I hope everyone's having an amazing day. Today's video is going to be on how to swing trade. This is like something that seems to be like, oh, TraqFX, this is the basic stuff everyone knows, but not really. It gets more complicated than just using the higher time frames and looking at the higher, the candles and using a higher time frame order block. It's way more than just analyzing from a higher time frame perspective. So I hope you guys have your notebook, your pen, your paper, your popcorn, your juice, whatever you do when you're watching my videos to study, whatever. Just make sure you're getting ready to write those notes, and let's get straight into this one. So the first thing is you have to understand swing trading versus scalp trading. So if you already have a good understanding of this, don't skip this, but maybe this could help you. So swing trading is when you're analyzing charts from a longer term perspective. So keep that in mind, longer term perspective. This means you're willing to wait long amount of time for your setups to come. So you have, technically, since it is the higher time frame charts, that does mean more time because obviously it's higher time frame. Most of the times you will hold your positions for a couple of days to weeks, and if possible months. Now the months thing is a little bit stretched out. I doubt a lot of you guys would have the willpower to hold it. If you do, you're insane. I wish I had that, but yeah. But yeah, that's basically what swing trading is. Yeah, swing trading. Now the pros of swing trading: you hold trades for days up to weeks. So that means that you don't really have to be in trades every single second looking for trades. You're in one trade and you're just chilling. You see this guy, this white guy on the beach, just chilling in his suit, watch the money come. That's basically swing trading. You sit down, drink your juice, and the money comes to you. Now, willing to wait for setups to come to you. Because you're using the higher time frames, that basically means that you're more chilled out, you're more relaxed, you're not really stressing about being in a trade every single second. You're waiting for those best possible setups, the best one. Analyzing from a longer term perspective. Now, the reason I say that this is a pro is because most of the times when we look at institutional trading, smart money trading, and the big money, the smart money, they're not really looking at the 15-minute or the 5-minute like everyone else likes to say. They're not even looking at the 4 hour. Matter of fact, they're trading off the monthly and weekly time frame. They have certain levels where like discounted premium. So they have certain levels where they're looking to get in and looking to get out. So the pro of trading on the higher time frame and analyzing from a longer term perspective is you're looking at where price is going to be going in the next couple of weeks and months rather than the next couple of minutes / hours. Now that analyzing where the price is going to be going next in the next week is so much easier than analyzing where it's going to go in the next minute, and I'll get into that. Using the higher time frames, the big boy time frames, the BBTF, the big boy time frames. So everyone comment BBTF if you made it this far. If you did, you're a legend. And yeah, so basically the reason this is a pro is because honestly, I'm gonna say this in the later part of the video. Let's just keep this short. Oh, my bad. More time off the chart. So we all trade forex for freedom and obviously for money. That's it. I just do it for freedom and money, and I actually genuinely like doing it. So if you're trading for freedom, scalping isn't for you. You're gonna be stuck on the charts every single day, staring at your computer screen for hours and hours and hours. When swing trading is more relaxed, you're off the charts, you do your analysis one day, and you simply wait for price to come to you. You're not chasing it, you wait. The best things happen when you have patience. So generally that's why I say this is a pro. Typically more money in swing trading. Now, why do you think Jeff Bezos, Elon Musk, Bill Gates, any other white billionaire in the world, why do you think they all they're all long-term investors? Well, it's because in long-term investing, you're just chilling. You do your work one time, you analyze one time, and you make money off of that one work, off of months and months and months and months. So if I'm saying, all right, we're right over here, let's say the market is all the way down here, but I think the market is going to come all the way up here. Instead of me just buying from here to here and then closing and looking for a new opportunity and risking more, instead what I could do is just buy right here once and just swing trade it all the way up to here, and I watch my money pile up and pile up and pile up. And the pro of this is you're risking less. Now you're not risking much anymore because you're already in the trade and you're already in the money. You're not closing it. Making money while sleeping, congratulations. If you've made money while you're sleeping, you have definitely made it in life. This is why I love swing trading. Making money while you're sleeping is like, it's the best feeling in the world, literally. Like, imagine you wake up, you check your MetaTrader, it's 9 p.m. Mom's screaming at you. You check your MetaTrader and just like $1,500 in profit. I'm going back to bed. I don't know about you, but making money while you're sleeping is a big one. With this is truly unlocking passive income. You don't have to work anymore. As soon as you're in that trade once, you can do whatever you want. Once you go outside, your capital is just increasing in value. It's just increasing and increasing and increasing, and it's beautiful. Position doubles and triples like we just went, and like I said, more relaxed. Now let's go over the cons. Yes, there's cons on this too. Setups may take days or even weeks to play out, so you're generally gonna have to be pretty patient. Now with me, the most I've ever waited on a setup was 2 weeks, but I had other pairs I was focusing on throughout those 2 weeks, so it was pretty good. Now emotions will get tested while swing trading. So basically the thing about swing trading is you're gonna be tempted to close your trade sometimes. You're gonna look at the trade, you're gonna look at the money, and you're gonna think, oh my god, I'm in so much profit, I should just close now. And then when the market, goes down a little bit, you're like, okay, shit, yeah, I'm losing all my money, I better close. So your emotions will get tested, and it's best to just watch the trade, the charts, and not the money itself. Wider stop losses. So we all know that if you're trading on the higher time frames, that means higher risk, but that also means higher reward. So it's double standards. So you're gonna have to adapt to the fact that you're gonna use wider stop losses, but as long as you're using proper risk management, only accommodating for 1% each trade, then you're gonna stay in the game long term, and there's no difference. And well, this is pretty controversial, but fewer trades. So if you are someone who wants to be in a lot of trades, maybe for the aesthetic, or I don't know, maybe it just helps you mentally, then yeah, swing trading isn't for you. Go back to the scalping, but fewer trades, in my opinion, is a pro. Now, scalping. Scalping is when you're looking to get in and out of trades. This usually means you're holding trades for either a few minutes or max up to an hour. Once you're out of one trade, you're on to the next one. When you scalp, you're typically analyzing for the short term rather than the long term. So there's pros and cons for each one, and that's what we're going to go over right now. Yeah, there's only 3, in my opinion at least. Making money within minutes. Now that's something cool, right? You're in and out of positions. You could be on the 1 minute time frame or the 15-minute time frame, and you're really just making money quick, really quick money. So if you want to go outside, take your wife out to the movies, boom, open up USD CAD, buy that joint, and then come out with $60 profit, and you're good. More trades doesn't always mean good. So more trades has a double standard as well, because if you are trading more, that also means that you're still risking the same amount, but the amount of trades that you're taking, and in this case it's increasing, that also means that your risk is going to be increasing, because there's always a risk of you getting stopped out. And not everyone has the best win rate, the win rate, and the win rate doesn't necessarily matter, but you're going to have to get used to losing a lot while at the same time winning. You're going to have to get used to losing a lot in order to actually understand scalp trading, because you're going to lose a lot, but it's all about the risk to reward at the end of the day. In and out, less emotionally tested. This is pretty good. I would agree on that. Now the cons of scalping: less freedom. You're spending hours on charts. Now I know people that stay hours on charts on the 1 minute looking for the best scalp opportunities, and they're just, even if they catch one good trade for the day, they're out. They're not out. They're staring on the charts, and they're gonna be like, all right, yo, TraqFX, I found a new setup. Like, trust me, there's no freedom in scalping unless you're pretty disciplined. Now lower time frame confusion. Now, when you're trading on the 15-minute, the 5-minute, the 1 minute, typically what's happening is the candles move really quick. They're moving up and down tremendously. It's really volatile. So you're going to get confused on what the structure is like. So you're going to have to backtest and study structure on the smaller time frames. You're going to have to get used to understanding discounted and premium values on the smaller time frames, and also which order blocks to use. And typically it's just not the best. It's, in my opinion, it's too much mental hurtness. Now, scalping on bad risk to reward. You're also gonna have to deal with those really bad risk to rewards, such as 1 to 2s, 1 to 1s, maybe even 1 to 3s. Now, 1 to 3 isn't bad. It's still good. It's around there, but the risk to reward is always gonna be random. You might find 1 to 8, and then 1 to 1. So keep that in mind. Higher risk. The reason I say higher risk is because you're gonna be looking to get in and out of trades. The more trades you take, the more risk you're acquiring. So keep that in mind. The risk does increase as well as does the reward. More trades giving a higher chance of losing, which is basically the same thing as higher risk. So now it gets to time frames. You have to get used to staring at the higher time frames or the higher time frame charts. Understand them before you try to use them. So I'll give you a good example. Sorry, mom. Let me go to trading view quick time. I'll cut that out or something. All right, boom. So let's look at the 1 minute right now. I was just messing around with the XAU USD. Let's go to like this. All right, definitely not. No way. I hate that. Really ugly. All right. So yeah. So typically when we're looking at gold on the 1 minute time frame, you can see that this thing is moving every single minute. This is all 1 minute worth of price action right here. Each candle is 1 minute. Let's go to the 4 hour time frame or even the daily time frame. Now the 4 hour time frame is much more cleaner. It's more chilled out. It's more like understandable. You don't have to stress out about it. It's way more chiller. Now, when you are analyzing on the higher time frames like the daily, you're not really thinking about what is the candle going to be closing as. Is it going to close bullish? Is it going to close bearish? No, you're not doing that. What you're doing is you're looking at the higher time frame, maybe even the weekly, and you're going to say, all right, where is price heading in the next couple of weeks? Is it going to come up to this high? Is it going to come up to this high? Or is it going to take out the liquidity, come into here, and then come up to those highs? What is it going to do first? So that's typically what we're doing. And the reason I like swing trading a lot more is because, well, all you're really doing is you're waiting. So for me, I'm like, okay, there's liquidity here. All I have to do is wait for price to drop down. Once price drops down, I can go make my next move, which is going to be price coming into here. Once price comes into here, I buy and I hold all the way up to here. That's basically it. So really, you're just chilling out. You're being patient. You're not stressing out about, is gold going to be bullish, bearish right now. You're more focused on the longer term of things. And in this, perspective, you make a lot more money. Now look at the weekly for say the weekly. Are you really gonna be trying to predict whether the next couple of minutes are gonna be going bullish or bearish? It's really hard to do that. Now obviously there's concepts and ways that you could predict what's gonna happen next. For example, you could say that, all right, since there is imbalance resting here, I could say that, all right, most likely the market is gonna come back up into here, tap that imbalance, and then go down. That's something that you could predict. But once again, since you are on the 15-minute and 5-minute time frame, finding the entry is hard because you cannot just buy right here. No one has enough leverage to buy right here and have a crazy stop loss, right? We don't have that type of leverage or money to risk. So that's something that you're gonna have to get used to. So the next thing that I was thinking about was the challenge. So my challenge to you guys is to stare at the higher time frames for an entire day. And in this video's comments, tell me what you noticed. And if I like your response and I genuinely feel like, you learned what the daily time frame has for you, I'll give you my course for free. I'll hit you up on Instagram, whatever. We'll get your contact and we'll get you enrolled in. Now, remember, I want to see a nice response. Doesn't mean give me a full essay or Harvard type shit. I just want to see a nice maybe sentence, and I just want to understand what you saw and how it helped you understand the charts. Now, let's go to the daily time frame right now. Each candle right now on the daily time frame, this candle, this candle, this candle, even this candle and this candle, all these candles that we see on the screen, it took 24 hours to print. That means that it took about 24 hours for this candle to form. So this is all 24 hours worth of price action, and that means that for 24 hours gold was bearish. Once again, right here, this was 24 hours worth of price action. This tells me that gold once again was bearish. But then at this point, we came to this low right here at 1679, but then the market ended up reversing all the way back up, indicating that there is buy side pressure and momentum coming in for the meantime. Now, don't get confused, because as the daily micro structure might be telling you this, if we look at the even higher time frames such as the weekly, we can easily see that gold has been going bullish and most likely is going to continue this bullish trend. So keep that in mind. That's something we all have to keep in mind. Now, let's go over to the next one. Making the choice. So choosing between scalping and swing trading can be hard, right? The way to make the decision is by looking at your personality. Are you more of a short-term person or do you think long-term? For me, my example is I'm more of a long-term person. I don't like to buy things or invest in things for the short term, such as scalping or crypto scalping, stuff like that. I look at the higher time frame, the longer the long. Imagine life has a higher time frame. I basically look at the higher time frame of life. I want to see what life has for me in the next 10 years, because there's no point of me being happy for the next 10 minutes if that means that in the next 10 years I'll be depressed or sad, right? And the goal is to be happy in life long term. So what I'm trying to do is I'm trying to sustain my wealth. I'm trying to sustain my growth and my happiness, and that's who I am as a person. That's who I am as my personality. So because of that reason by itself, I like to swing trade a lot more than scalp trade. Now, if you are opposite to me, you like to look at the smaller terms, and you're pretty not impatient, but that's not the right word. But you have the determination to just quickly make money in and out. Then 110% be a scalper. But once again, ask yourself these questions. How easily are you tempted to make important decisions in the heat of the moment? If you make important decisions in the heat of the moment, like right away, then scalping might not be for you, right? Because with scalping, it takes a lot of intelligence. It takes a lot of thinking. It takes a lot of determination and a strong mentality to only see what's actually there and not see what you want to see. Are you someone who has patience or not? Ask yourself these questions. Analyze your lifestyle, even how you eat and sleep. If you don't sleep at all, if you're someone who stays up all night, then yeah, maybe scalping is for you, because that way you can make money throughout the night while you sleep throughout the day, right? But if you are someone who likes to have a good sleep, you go outside, you travel, then swing trading is definitely for you. So you have to think about which one is right for you. Remember, no matter what someone says, it's all subjective. No one can convince you that objectively swing trading is better than scalp trading. Yeah, one has more money than the other, one is more lucrative, but there's no possible human way for someone to say, yeah, no, this is better, that's better. No, there's no way. So let me actually go over a couple of swing trade examples that I did catch on on GU. So basically, this is a swing trade that we called out a long time ago. I'll leave the chart up in the description if you guys want to see the before. Make sure you check the description for the before analysis, and this is obviously the after. I know a lot of people hate when I show them these crazy RRs, because you guys think it's back tested or something. I don't know what goes through your mind, but yeah. So looking at GU right now, let me explain where I started and why I had things the way they were. So looking at GU right now, GU was all the way over here when I first looked at this, and I was on the daily time frame. Now, when you first come to the charts, right? Let's actually just mark this up. When you first come to the charts and you look at this, you're gonna be thinking, oh my God, TraqFX, what am I staring at? Like what do I do? Do I go on the daily time frame? Do I go to the 15, the 20, the 30, the 5? What do I do? Well, if you paid attention to my other videos, right? You paid attention to my other videos and you genuinely took notes, you did what you had to do, then you would know what to do, right? From a swing trading perspective, let's delete everything, right? Boom, delete everything right here. Let's go back to replay mode all the way over here. What would you do first? Well, it's simple. Read the story. We have to read the story of what the trend is telling us. What is the trend? That's number one. What is the trend? The only way to find out what the trend is on the higher time frames, obviously. And on the higher time frame, the trend is telling me that structure is bullish. We have a high, a higher low, a higher high, a higher low, and then a higher high. So clearly the trend is still moving in a bullish direction. Order flow, bullish order flow is still moving up. And the reason I can do this is because the higher time frames is moving up. In the long term, yeah, we did have some crazy pullbacks, but these pullbacks were minor, because look at the insane continuations we had after those pullbacks. Crazy pullback with a nice continuation. So that's number one. Trend is up, so we know we're looking for buys. That means long term GBP USD has to go up. Now we have to understand that where is the next buy opportunity? That's number one. Where is the next buy opportunity? The first way to identify that is, number one, where is your liquidity? What is price doing? What is it doing here over here? Where is going next? And where is it heading later on? First off, let me see where it's heading later on. Long term, I know GU is bullish, so I could say, all right, long term, we're gonna come all the way back up here and make a new high. Because what did we do before? We created a high, we broke it with a new high. Created a high once again, broke it, with a new high. Created this high right here, just broke it with another new high. So we're continuously making newer highs, which does indicate that GU might be coming back over here. So I know where my long-term target is. That's my long-term target, where GU is going long-term. But before GU just goes there, because it can't just randomly just go bullish like that right away, we have to understand where's the next buy opportunity for me to get in. Because remember, as a trader, you're not looking to get in at this. You're looking to get in when there is an opportunity to get in. So let me look at the charts right now. So on the charts right now, I'm going to look at my liquidity. I can see that we created this high, a clean higher low, and then a higher high. Now, we had these equal lows resting right here. Clean equal lows. Now, what does this tell you? Well, this tells you that there's liquidity resting below. That means that people were actually looking to get involved in opportunities over here. So there's hundreds of millions of dollars just resting over here because there's retail traders that bought. Remember, we see one bottom and then a second bottom. But within these two bottoms, there was a ton of traders that were just spamming the buy button on their phone, breaking that shit, right? Just people spamming it, and that means that their stop losses are all over here. So we know that GU is attached to money. Wherever the money is, that's where GU is going to go first. So we know our long-term perspective, GU is going bullish. This is long-term. But we need to understand what it's going to do first before it gets there. So we know before it gets there, it's going to go down to take out all this money over here. But after we do that, what's next? So let's go down to the smaller time frame. Before we do that, let's just wait for GU to take the money out first. So boom, GU takes the money out. Rule number one, step number one, finished. We're done. Step number one is finished. We're finally done. Step number two, what's next? That's step number two. Well, if you guys watch my other videos, I always say, if there's clean equal lows, there's clean liquidity, look below it. Most likely there's going to be an institutional candle. And right over here, right below where the equal lows were first made, I can see that there's a clean bearish institutional candle right there. Well, someone might say, alright, wait, TraqFX, this is tested. There's no way you can, oh, that's ugly, my bad. Yeah, there's no way you can, buy right here. Well, that's why we have to refine. So on the daily time frame, yes, we do see a daily institutional candle, but go down to the other time frame. Go down, check the 12-hour time frame and refine it. And on the 12-hour time frame, what do we see? We see an even cleaner institutional candle right here. One that's untested this time. So we marked up this institutional candle right here, and boom, price made its way inside of it. My bad, I did not need to do that. But yeah, price makes its way inside of it. Now, as it makes its way inside of it, we know that this is the turning point. We're expecting the market to use this institutional candle as a trampoline. The market was selling off to find the trampoline, and after it finds it, it's going all the way back up. That's our anticipation, at least. That's what we're expecting. And mind you, this is all done on the higher time frame. I'm not on the 15-minute, and keep in mind, if I was on the 15-minute time frame, there's no way I could have predicted that the market is going all the way down like this. But what did I do? I stuck to the 12-hour and the daily time frame, and I waited for price to come to me. I waited for price to tell me what's happening. I'm reading the story, that's it. I'm waiting for price to come, and after price comes to wherever it comes, from there I'll read the story more. I go down to the smaller time frames, and that's where I can find my entry. So boom, price comes down into my trampoline. At this point, what I did is, this is when I went down to the smaller time frames to look for confirmation. Because remember this, if we do have an institutional candle and price is inside of it, most likely what's happening inside of this institutional candle now is extremely important. This is what's going to tell you whether price is going to continue going down or whether price is going to reverse going bullish. Because look, we do see this bearish structure forming right here, but this bearish structure was completely unvaluable to us because it wasn't in any areas of significance. Now price is in an area of significance. So what we want to see is this bearish structure we just saw right here, this strong down move. We want to see it get finished. We want to see bullish pressure come down. So the best way to do that is to go down to the smaller time frame and look at structure at this point. So at this point, looking at structure, what I can see on the 15-minute is that we have these lower lows, lower highs. We have a we have a high, we have a low, and then we have a lower high, and then a lower low. So we can see that we're following this bearish structure right over here. At this point, we reverse, right? We reverse. We still have to break this high right here, and we haven't quite done that. So as soon as we break this high, I can consider this as a break of structure, because all a break of structure is the market going against structure. We're creating these lower lows, lower highs, and then the market reverses. Imagine you're climbing up a mountain, right? You're climbing up this mountain and you're following this structure where you're going up, you have a small break. You go up, you have a small break, and then you go up. But then all of a sudden, you get way too high and you're like, all right, screw this, I'm gonna go down now. So you're like, all right, I have to go down the mountain. So you start running down. You go down, small break, down, small break, you go down, and then another small break. So you can see first you're going up, but now you're going down. That's the exact same thing as forex. First we're going down, but now we're going up. We're moving in a bullish direction because we're breaking structure. So boom, let's wait for this break of structure to happen, and there we go. We can see the candle itself closed above this lower high. We closed above this lower high. Now what's next? Well, let's go down back to like our higher time frame, so this is the 30, and all we're gonna do is we're gonna look for that candle, that order block that was responsible for that break of structure. That's all we're doing. We're just looking for that order block that was responsible for this major move up. So what do I mean by that? What do I mean by that? Well, when you're jumping, imagine you're a basketball player, right? And this is the net. You have to jump here. When you jump, are you going to start looking at the person's jump when he already jumped? Or are you going to be looking at his feet when he jumped? You get what I mean? So, for example, let's say LeBron James, right? LeBron James jumps. He jumps right now. His jump started right here. Are you going to be, looking at when he's over here and thinking, oh shit, how did he get so high? Or are you going to be looking at the bottom at his feet before he dunked and watch his feet and see the trampoline? You're going to see how he pushed himself up. Obviously, you're going to focus on his feet first to get the technique. Same thing in forex. Find that major move up that broke structure and then look for that major bearish candle before that bullish move up. That was the cause of the breakup structure. Now, at this point, what do we do? Well, I'm definitely just chilling. At this point, I would do just set a limit. I would set a limit and I'd go away. That's the beauty of swing trading. I'd set my limit right here. We can get rid of this. I'd go to the 4-hour time frame and I can set my limit right here. Boom. And then I could go all the way down here, set my stop loss for 21 pips, and I could just target wherever I wanted to target. And my target is all the way over here. Now, at this point, all we're doing is we set our limit, and all we have to do is wait for price to come into it. So, let's see if we even got triggered in. My bad. And as you can see, price moved away and came back in perfectly. The beauty of this, it's insane. So, we get triggered in, and now we're in. Once we're in, all we have to do is chill. That's it. You're just chilling. You're in the market, you're in the trade, and all you're doing now is you're just waiting for price to go up. All you have to do now is nothing. Just sit back and watch the trade. Watch the trade maybe 15 minutes a day. Because remember, since you're on the higher time frame charts, you're not looking at where price is going to be heading in the next 5 minutes. You know it has to go break above this level here, because why? There's liquidity resting over here. We know that there's liquidity resting above this area, so price has to come above, take it out. So we know that long term it's going bullish, and we don't have to worry about this smaller drawdown because we already caught the entry from the low. So at this point, wait for price to break above this and just watch your money pile up. It's insane. Like, let's just skip this out, and boom, the market goes above there just like I said, and now it's coming back down, obviously, to probably retest maybe this institutional candle right here. Nothing crazy, but yeah, that's basically how you swing trade. And it seems like a lot of work, but remember, I waited for this. I waited for this for 2 weeks, maybe a week, maybe. And it took me 15 minutes worth of work just to catch this beautiful entry and to make all that money on top of it. So 15 minutes, that's it. 15 minutes just to catch this entry. Just let that sink in. So it's something, it's not crazy. It's really, really easy. And that's why I love swing trading. I'm just chilling. And once I'm in the trade, oh, you can bet your ass you're going to see me at the beach swimming, playing soccer, working out, doing whatever the hell I want because I have the freedom to do it. So that's how I swing trade. This is the best way to swing trade, in my own opinion. If you guys do have any questions, please feel free to leave a comment in the comment section, and I'll get back to you as soon as possible. Make sure you do the challenge. Write down. Remember, I want you to stare at the daily time frame for a day. You could not. You don't even have to do it. You could just write something in the description, but it's gonna be your loss because at the end of the day, this is a learning experience. So yeah, make sure you guys watch the entire video, take note if you made it this far, you know, give yourself a pat on the back, and yeah, have a good one, peace out, stay safe, and goodbye.